I'm now trying to do a double recording. So when we take a look at money, there's kind of some unique conversations to have. There are multiple categories of money. It's about time that we have a lady on a dollar bill. Those are supposed to be two eyes. Okay. So how would you categorize, how would you define money? If you had to do that, how would you define or describe money? Question mark. The root of all evil. Man, well done. Value. A piece of paper that makes the world go round. Thank you, Alfredo. I think it's important to recognize a central piece that money certainly does have its value, but there are a universal trade accepted by all in that region or country. That is a great textbook definition. So let's have a quick conversation about money. I think one of the spots we have to recognize is money is categorized differently. The main category of money is called M1. And what makes M1 unique is the fact that it is what's called a liquid asset. And because I'm feeling all artistic, there's my little drop of water, and I'll put another drop of water right there. So it is a liquid asset. And what that means is it can readily be exchanged. Now, I own a iPhone XS that is pretty valuable. I can't really go into the grocery store, have a bunch of groceries, and when it comes time to pay, say, oh, I'm sorry, I don't have any M1, take my cell phone instead. A cashier will normally not take my cell phone as payment. So cell phones, homes, cars, bars of gold are not very liquid. When we take a look at liquid assets, one of the pieces that we're really talking about are things like, we would say, currency. Currency is a liquid asset, whether that is the bills, a $1, a $10, a $100 bill. That's certainly currency. Another version of currency is going to be in change. So it's not just bills, it can be, that's supposed to be a coin. It can be a 0.01, or it can be 1 cent, or a dime, or a quarter. Those are all very high quality versions of currency. And currency are liquid. You can take currency pretty easily and exchange that for something. Now, another area of currency that is not quite as common, or another area of M1 that's not quite as common as it used to be, have a piece of paper and it says something like pay to. There's going to be a little line through there where you have to sign your name, and you'll put down the amount of money that you want to spend. We would call that a check. When is the last time you physically wrote a paper check? For me, it's been months.
To me, That's how I pay my ortho.
So some of us use checks more often. It's not nearly as popular as it once was, but personal checks are M1. There's also a style of M1 that you have to be aware of that is kind of check-like, and that is going to be, they have these ideas that are called money orders. If you've ever gone out and picked up a money order, you had to take in cash, and you got a piece of paper that was valued at that cash that is still very, very liquid. Some money orders work. And although we don't utilize them as much as we used to, there are also these ideas of a traveler's check. They're still M1, and they're pretty liquid. So we can use currency, we can use a check as a version of liquid M1. Another one that has gotten pretty popular, that I'm guessing every single one of you guys probably have one of these. The debit card that will have the dumb little chip in the side that hardly ever works. There is a debit card, and what makes a debit card part of the M1 and what we have to grasp is debit cards are automatically linked to a checking account. It is a digital version of writing a check. When you run your debit card, you're supposed to have the money in your account to access the debit card. A debit card is not a credit card. Debit cards are directly attached to your liquid M1, and it's a convenient way to pay for stuff without having to carry around a bunch of currency or without having to carry around a bunch of checks. So that works out pretty well. The last one that I'm aware of, and you may have some others that you're aware of, but is this idea of a very, very, very digital version of M1. And I'm going to draw an old school one. You may have some version of a smartphone where now you can go ahead and use the Google Pay, the Apple Pay. They can be linked to your debit card, and you can walk in and you can swipe your phone, which is also linked to your checking account. Draw that back in and have access to that liquid money. So every single one of these is a section of what we would call liquid money, and it is a predominant and big part of the monetary supply. So liquid money M1 is a great category. There is a second category that we need to, Isaac, good piece through there. So the money orders were out. Cryptocurrency. Cryptocurrency is unique in the fact that it is not necessarily tied into any kind of fiat money. When we say fiat money, I can put that down as a little note here. Fiat money, and that is F-I-A-T, fiat money is tied to some sort of government. If I had a Benjamin, a $100 bill, and I said, man, this is worth $100, it doesn't matter that I said it's worth $100. What matters is the United States government says it's worth $100. And when we look at cryptocurrency, it's different because it is not tied into any kind of external backing of a government or gold. There is just an electronic understanding that it has value. And so cryptocurrency is a new kind of piece. I have lots of friends that have invested in crypto, like that's going to be the new style of money, but it sure hasn't taken off. And one of the reasons why it hasn't taken off is because there's no financial backer. There's nobody saying, man, this cryptocurrency is certainly worth whatever we say it's going to be worth. And until that happens, I'm not sure if cryptocurrency is ever going to be the kind of thing that really takes off. But there is a style of money that's not really, really, really money. It's called M2, or near money. The big piece that distinguishes M2 from the rest of it is the fact that it is designed to be nearly money. It's nearly M1, which really means it's not quite as liquid. And the best example, and the one that the government utilizes very, very consistently, is with a savings account. Savings accounts are not liquid money. They seem like they are, but from a government legal point of view, they aren't considered real money. Let me give you the quick background. If we were around, if you guys were around, as long as I've been around, you would realize when we went to the bank, if we wanted to go ahead and pull money out of our savings account, we couldn't do it. We didn't have access. We don't have access to our savings account. It's not liquid. We had to transfer the money from our savings account into our checking account. And when we translated it into our checking account, then it became liquid money. But you had to fill out a transfer slip. You had to make it liquid. And when you did that, it became liquid. So it was near money. Now today, you and I have to go through the same process. You cannot spend your savings account, but digitally, we transfer that money from the savings to the checking and then spend it. And how fast do digital transfers take? They are instantaneous, a snap of our fingers. So just recognize they are near money, but what makes them near money is they are not totally liquid. Once you transfer a savings account into your checking account, then it's a part of the M1 monetary supply. We have one category that I want to make sure that you understand, and let's hit it up now. When we discuss credit cards, if you have a Capital One credit card and you know what's in your wallet, that's kind of a Samuel Jackson kind of a thing. It is not included as a part of M1. It is not. Credit cards are not money. And I recognize that you can walk into Target with your credit card and you can slide your Capital One card and get product. But here's my question. If you have a Capital One card, who paid for the product? Did you pay for it? Capital One paid for it. You're correct. Capital One paid for it. It wasn't your money. When we utilize credit cards, Capital One already has their resources, their liquid funds in the monetary supply. So we don't get to double dip on a credit card and pretend it's your money and it's M1 money that's in the monetary supply, because it's not your money. It's Capital One's money. And they kind of want to keep it for a little bit. So the credit card is money that you don't have, and you can think of it that way. Just recognize that the federal financial institutions do not consider credit cards a part of the monetary supply. They don't consider that part of the M1. So when we think about money in and of itself, realize that we have some functions for money. It has a purpose. And the biggest function of money is probably, as we've suggested, it's that medium of exchange. I give you money, you give me a product. I give you some cash, and you give me a chocolate-covered strawberry. The other area that we utilize money, other than the medium of exchange, we can use it for accounting purposes. We can use it as a store of value. I was telling the other class that one of the habits that I've gotten into over time is, out of every single paycheck, I'll take a little bit of money, not a lot. It might just be 20 bucks or, whatever I can safely do. And I put it in my safe in the house. I put a little bit of cash every single month, and I don't spend it. It just sits there. It's not gaining any kind of interest. It's not doing anything other than providing me some security. So if I need to get some cash, I have it available. It is a store of value for me. So as we recognize all the things that occurs, one of the spots that we have to get our brains around a little bit is about who does what. And so when we take a look at the functions of money, there's got to be a player. There's got to be somebody involved that is participating and making all these things happen. And there is. For us in the United States, this entity is called the Federal Reserve. The Federal Reserve. Many folks, and you'll hear me say this a lot, that most folks will call the Federal Reserve simply the Fed. And when we take a look at the Fed, here's some information about the Fed itself. The Fed is a conglomeration or a group. It is a group of 12 banks. And not only are they banks, they are federal banks. And so they serve as the government's bank. That's one of the biggest pieces they do. They serve as the government's bank. And there are 12 individuals there, and they each will have a person running the individual banks. And they do things like they supply currency. Yay. So we have to get our currency from somewhere. They don't print the currency, they just supply it, right? They will go ahead and they can provide loans to banks. So not only are they the government bank, they're the bank for commercial banks. So if Chase needs a, oh dang it, if Chase needs a loan, where do they go? They can go to the Fed. And so the federal banker, they can give loans to other banks. And the biggest piece that they do that we're leading into is they go ahead, and I'm going to change this idea because it's important. They regulate the monetary supply. They regulate the monetary supply. And that gets to be important because it's that monetary supply. It is the information, it is all the stuff that we had in that M1 and partial M2 that helps dictate what is the strength of the economy. So the fact they regulate the monetary supply, it is a crucial piece for them. And we're going to talk a little bit this next week about how they do that. The last little bit of trivia pursuit for you guys, they also, when they put their world together, there is a chair of the Fed, and this person for the chair, his name, this is the current chair, is Jerome Powell. Chairs serve for a 6-year time period. So one of the reasons why 6 years is so important is because the federal chair of the Fed is around longer than your average president may be. They were trying to set up this federal piece to go ahead and be separate from politics. Somebody that looked at the economy and worked in the best interest of the economy without taking a look at politics. And so once they get appointed or elected, then they are around for 6 years. Around for 6 years. And even though we say they're trying not to be political, when you're dealing with money, of course, there's some politics that are taking part. And if not politics, there's certainly powers involved. One of the spots that I thought were unique is the fact that this is more historical than anything. Janet Yellen. She was the previous chair prior to Jerome Powell, and Janet Yellen was the first woman to ever be in charge of the Fed, to ever be totally in charge of the monetary supply. And she was elected in the Obama years, and they put a woman in charge of the monetary supply, and she did a great job. And so it was a nice historical piece to see a woman in charge of the monetary supply, and she managed the Fed pretty well. So the Fed is a part of the federal government, and we'll talk about how they monitor the monetary supply. It's a very large portion of what they do, and you'll see right now how the Fed is beginning to do that. I would encourage you guys as homework not only to finish off your economic analysis, that's the first thing you should do, but between now and Tuesday, kind of pay attention to what's happening economically, and in particular, some of the things that the Fed is doing, because you and I now recognize, because of the COVID issue that we're dealing with, that there are some potential challenges with the economy. And I wonder if you can recognize some of the things the Fed, the Federal Reserve System, is doing in the background to try to keep our economy prospering and to keep the United States, at least financially, working on all cylinders. So keep an eye out for those kinds of details and see what you can find.